every single day that you want to quit is another day that someone else did. And if you really want to be successful, you got to go deeper and deeper and deeper. And pessimists could say, if it didn't work out, that was an idiotic approach. I should have known when to pivot. I should have known when to take myself out. But when you got conviction, you're passionate about something and you are unwilling to say no, you'll go into what one of my closest mentors tells me, which is like cockroach mode. And you refuse to die. And you'll figure it out one way or the other.
From Alvia, this is Preferred Return, your opportunity to learn from the brightest minds in the private capital market. Ready to own your technology edge? Let's get you that preferred return. Everyone talks about financial advice, who to trust, where to start, and whether the traditional advisor model even works for younger generations. Jack Boudreau is tackling that challenge head on, building a platform that connects 25 to 45-year-olds with the right financial advisors for their needs. In this episode of Preferred Return, Jack shares how he left a stable career at JPMorgan to go all in on Habits, a venture-backed marketplace revolutionizing how individuals and families find financial advisors. From bootstrapping to investor pitches, Jack breaks down the grind, the mindset, and the key lessons that turned his vision into reality. Let's get into it. Jack, welcome to Preferred Return. So grateful to have you here, and we're so excited to dive into your story, especially the path you've taken along the way. But before we get in there, monumental highlight, this is a big month about you getting a $1.1 million pre-seed round led by Atlanta Ventures on the 14th. So congratulations, huge kudos. And I think the exciting part I read is 50 advisory firms on today with hundreds on the wait list. So big congratulations.
I appreciate that, man. Literally, we organized the announcement, and coincidentally, we had all these other milestones on top of it with us presenting at 1871's Fintech Summit. Huge. And what are the odds we actually end up winning the thing in their pitch competition out of 46 other globally distributed Fintech companies? We launched like a new product this week. There's so much we're hiring. This podcast is going to be more timely.
Yeah, super excited, and congratulations on that. So let's dive right in and tell us a little bit about Habits and really specifically like who you're helping and how.
Yeah, well, super high level, our core product right now is our marketplace where we are helping, 25 to 45-year-olds source and connect with a financial advisor, right? So since we're a marketplace, unfortunately, Chris, we actually run two businesses, right? You got the supply side and you have the demand side. So think like Lyft, think about DoorDash. These are other well-known marketplaces where you're optimizing two parties to get in front of one another and to help one another. So in our case, right, the supply side being financial advisors, there's 450,000 of them in the United States alone. And we're talking about the guys who are selling you insurance, to the registered investment advisor who's got a me, myself, and I LLC, to the big time broker dealers, JPMorgan, Citigroup, Goldman Sachs, et cetera, right? What we're trying to do is find those who are best equipped to service a younger demographic. And that can be on a multitude of different variables that we can kind of get into. But on the flip side, right, you got the demand side of this marketplace. This is the 25 to 45-year-olds, typically Gen Z, millennials. They have every question in the world. They're going through various life stages, first house, married or engagement, first kid. Maybe you get that big management job. You get equity comp for the first time, that big time sales commission check. We jokingly say that at Habits, I guess at least internally, that in some way, shape, or form, everybody has a personal finance do-it-yourself expiration date. So that's a little bit of the mission, a little bit about the parties that we're kind of working with here.
Oh, it's amazing. And I think some of the stuff that I read where you talk about who you're serving, there's this vulnerability that you ask of people where it's like, I know enough to know I don't know enough. And a lot of people I've read about when you were at JPMorgan, where it's, hey, I manage this money, but I still have questions. And if I still have questions, then others do too.
It's hard because you have to be vulnerable and honest. And what I think is really unique about the nature of startups in this day and age, and when I mean this day and age, I mean like kind of like post-COVID now, people really want to know what's going on just beyond the problem you're solving. They want to know what the day-to-day is like. They want to know the personality of the captain, driving the ship forward. And so we build in public. So I have said publicly, but just to be very direct with you, I personally experienced the problem. I was looking for a financial advisor. I was really fortunate at a young age to learn the power of great advice, especially early and often. I probably don't need to educate anyone listening onto the podcast here today The most formative years of any financial plan are the beginning. Hence why we really love to focus on this demographic. Just the tough part is, man, if you're below the age of 45, you definitely got some bruises and or some tough memories from the financial crisis. There's a lot of distrust with the brick and mortar nature of the traditional financial services industry. So there's a lot of headwinds, but a lot of the tailwinds kind of supporting us are really just the core understanding that a lot of us feel this way. We want help. We don't really know where to go, but we lean on YouTube, TikTok, and Instagram, man. I think everybody should have a financial advisor. We just want to give them an easy way to figure out their options.
It's kind of this metamorphosis of how trust is earned and where you seek those like trusted advisor voices where we're worn down and there's some atrophy around like the ones that commercially come to us. The communities that we're listening to are much more digital and are much more voices of our own. So I definitely have seen some resonance there, especially the community that you built there about being able to idea share and trust your peer as opposed to trusting the voices that are paying to get in your face.
In this world, people crave online communities. We want intuitive technology. At least at a minimum, a lot of us almost crave a simple, easy way of doing everything. And that's what Habits is trying to do with at least professional services.
Absolutely. Yeah. And good point. We are a no screen household here at the Andersons, but
I love that. I love that. I didn't know that. I love the no screen mentality. Literally at least for me and like the broader team, since we work remotely, you need a detox from technology.
Absolutely.
You got to. Prior to this conversation, I went on a beautiful walk. It's sunny outside, get my vitamin D, get your body. You got to move around, man, especially if you're like me or probably no different than you when you're kind of sitting at a desk for long hours of the day.
Absolutely. Absolutely. Well, let's dive a little bit deeper because I think that the story from what you're doing today, how you got from where you were today, that journey is fascinating. And I think specifically around, you talk with a lot of founders, it's like it's a road less traveled, but there's this moment of like, hey, the voices that were there years ago when you were at JPMorgan, having a successful career, the kind of the path is laid very clearly in front of you, and it's very easy to stay that path to go there, continue upward. I guess the question I have is, as you talk a little bit, if you can give us a little bit of background on that story, I guess the question I have is like, what gave you the guts? And what was that moment of guts to say like, this is the path, I've been working my life towards this at Butler and college and all the way through. What was that moment of gutsiness?
I guess by way of introduction, right? Started the career in the analyst program at JPMorgan. I go through the internal hiring process to eventually be co-leading a team in Chicago, but in the private bank, that's when I got exposure to working with people and markets, and I loved it. I loved it so much. Grew up in a house where both my parents dedicated a large portion of their career to the nonprofit industry, right? So raising a dollar, being a member of the community, like these are key lessons in my adolescence. So it's no surprise for me to end up in financial services in some way, shape, or form. But to your point, I'm in my late 20s. I'm fortunate to have had a lucrative career in the bank. And I'm kind of thinking to myself, like, all right, I feel like I've mastered like 85% of this job. But to master the final 15%, I'm going to have to be in this industry, in this role at this bank for the next 30 years. And I already know that, I'm not going to go down a rabbit hole of, me being able to lean on Social Security or when am I going to retire one day. But I know that for someone like myself, I love working. I love being busy. So I'm in no rush to become a subject matter expert in anything. So I really wanted to chase my passions. So I'll kind of get into what ultimately led to the leap. But right, I wanted and really craved the opportunity to work with people who were swinging to the fences, right? They're taking big risks. They wanted to change daily lives. I focused a lot of my time and attention at the bank at VC funds, and I just felt jealous. I was helping them with their day-to-day, but I wanted to work in their businesses. I wanted to work side by side with them. And when I began to recognize, unfortunately, I had exposure to them, so I got to ask a lot of questions. And many of them said, look, man, you just got to take a leap and figure it out. But it's a long-winded way of me saying, Chris, I had the expertise. I kind of felt a little bit of the itch. But if you want, I'm willing to get really vulnerable if you really want to. And I can tell you like literally what those like few months were before I made that leap.
I'd love to get in there. I think that part of it is, as people are looking at your path, there's subject matter. Why financial advisory? Like, was it that inspired you in terms of subject matter where you're like, I can solve something, I see an angle, it's not being solved? Or is it in unison I want to build something that I get jacked up to work for every day, and I want to lead that path of creating something that's mine?
Basically, so I was co-leading the FIG team, and I put together what I would define as a fancy Excel sheet with some very basic and simple programming. I wanted to understand my team's daily and weekly time investment because then we could really see what was like moving the needle for our business and just kind of like focus on it. And literally year over year, we grew revenue by 20% on a $2.5 billion book of business. I was thrilled. I'm like, oh my God, I'm going to be a star in this flagship institution. But, contrary to what my managers and mentors and other industry executives had kind of advised me to do, I really don't think it was that Excel sheet that really was moving the needle. I was just targeting the generation that a lot of people just kind of turn their head to, right? Just millennials and Gen Z, because they don't have liquid assets, right? They supposedly don't want to work with financial advisors. They supposedly would rather work with some sort of like AI driven tool. Not that there's anything against AI or like a robo advisor. It's just people still want that one-to-one connection. So like that's one angle to it. On the other side of it, outside of me looking for my own financial advisor and wanting someone to do more than just investment management, I saw one thing that was very correlated to all of my friends and family, which is that they experienced this problem too. So Habits literally started before I left the bank with me helping other people source and connect with a financial advisor. They didn't really meet the criteria of a multi-millionaire private bank JPMorgan client. So it's a weird way of me saying I kind of stumbled into starting Habits. So one day I organized an LLC because I figured that after amendments made to the Investment Advisors Act in November of 2022, where you could legally receive compensation by referring business to financial advisors or financial institutions, I said to myself, well, why don't I leave the bank, get paid here, and then maybe I'll just figure out and see where this thing kind of takes me.
That's really interesting. The part, especially where you're talking about like this identifying the need. There's this thing where maybe I'm biased to it's like you grow up and you go to school and you think about like, hey, I'm going to get this aha moment and I'm going to do the next post-it note. And then it's easy street for me. And what you tend to forget during that path is listening to the problems and issues that are surrounding you that maybe you're just turning a blind eye to, especially like in the bank where you have subject matter, but like these harder talks, the conversations that people don't want to have, the difficult ones that people shy away from, you double down into them and saw that tension and didn't run away from the obstacle. You kind of found the obstacle with the opportunity. And I think that's a fascinating part where it's like, if you're seeing the obstacle at the bank where you're solving for tons of people, that issue existed across in the marketplace.
Very similarly, the way that I've always thought about it is there's two avenues for a good startup, right? Yeah. You have better, cheaper, faster, or brave new world. You're either taking an existing solution that maybe has a brick and mortar presence, that maybe has been an industry leader for decades, but you believe that you understand a problem that maybe they now created by being around for so long, or the quality of their service has diminished as they've scaled, and you're going to come in and you're going to provide more for less. Alternatively, you can take the Elon Musk approach and we're going to privatize space travel, or we're going to come out and we are going to completely create an entirely new regulatory environment for ride sharing and be an Uber or be a Lyft, right? Or you could be a DoorDash or a Grubhub. And like, you know what? We're going to create a three-sided marketplace for food delivery, right? I don't know about you, but when I grew up, when we wanted to order something, we just called the pizza spot. We didn't have 15 different apps that we could choose from. But the reason why I share this is because there's so many different ways, but I think people overthink it. Instead of trying to find a problem, one's going to fall into your lap and you're going to have some probably either personal experience. You're either going to have time personally experiencing that problem, or you're going to be in an institution where you start to recognize the value that it creates. For me, I guess it was a combo of both.
It's so fascinating to watch because in our day-to-day lives, you feel this tendency to go away from the problems, period, right? And try to mitigate issues or risks. And then you listen to people like yourself and it's like, that is my entire raison d'etre is that problem, that issue. So it's like, I'm begging for it. And it's so fascinating to see how we kind of react day to day versus like where the opportunity lays, which is fascinating. Probably everyone's telling you you're a little bit crazy. Like, why would you step away from this? You worked so hard to get here. Can you tell us like what those months leading up, like what's inside the head of Jack that's telling him no, 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 while you keep marching towards that end goal?
Chris, it was terrifying. I lied to my parents. I didn't initially lie to my managers, but I made it sound like I was joining a VC fund for like the next few years of my career, when in reality it was a 3-month contract that was going to pay me $6,000 gross, which, is a good living, but that wasn't even the equivalent of one paycheck that I received biweekly from JPMorgan. I was going from making $250,000 a year to basically nothing. I was going to have to figure out my own healthcare. A lot of life changes happens when you decide to take the leap, and reality hits you in the face pretty darn quickly, which is why I always tell friends who have interest in starting their own company, and it doesn't need to be some robust venture-backed idea. It could be a side hustle. You have to have the passion, or you have to have personally experienced the problem or have touched people, or else you're just not going to have the motivation to go through. Because 4 months after I left the bank, I found myself in Boston in a, kind of a small apartment. And I'm thinking to myself, what have I done? And I'm leaning on a hunch, maybe some small conviction, where every single day I'm being told no 99 out of 100 times as I try to explain the fact that I want to make a shift in the industry. So when I talk about vulnerability and getting fully honest, I think if you talk to any founder who says, oh yeah, it's like not that big a deal, it's not that big of a risk, you just got to figure it out. The figure out part, I kind of agree with, but the other two, no true founder will ever say that. It requires a lot of mental sacrifice before you start to consider the social sacrifice, such as all of your friends now are increasing their lifestyles.
Yep.
Right now, when you're going to weddings, you're the guy like, can I give $125 to the, honeymoon fund? You really have to look in the mirror and say to yourself, this is what I want to do, and this is a problem I care about. How's that for vulnerability?
Pretty damn real. I think about it, it's like I read about how, you went from that lifestyle to travel and grinding, right? It's like, it's like, all right, well, you look at the years you started and now it's $1.1 million pre-seed, and I can just hear people like, look at this overnight success, when in actuality, it's like you were grinding the nights, right? Like up till 2 a.m., calling the people, getting out there. It's like, did you double down on like that grind to distract yourself from like all the other stuff?
I think you're referencing like a LinkedIn post that went kind of viral of how habits really started, because we bootstrapped in moonlighting. I think we bootstrapped to right around like 100K in annual recurring revenue, and we monetized directly from financial advisors. And I can kind of go into that whole story, but the crux of, to your point, of the overnight success, that couldn't be further from the truth. Chris, I probably have pitched 500 plus investors, from angel to the ones who could write me a 5K check, to the ones who could write me a 500K check, to the micro VCs that are, put you through 4 to 5 meetings to maybe get a 25K check, to talking to like A16Z where you can maybe have a $50 million check. Like, I've talked with everybody and anybody. This industry is not for the thin-skinned. And the reason why I say that with such confidence is because that LinkedIn post, or that 2 a.m. kind of comment, when we were moonlighting habits, when I'm talking about I'm talking about my co-founder and I was essentially the chief of staff for Puma, at least in their Puma Hoops division. So I'm traveling the globe, and I'm literally helping people source and connect with a financial advisor via Zoom in the Munich airport, or in Ho Chi Minh at 3 a.m. in my hotel room. Or maybe I'm going to visit my girlfriend who lived in Indianapolis at the time, and we're at a coffee shop, and it's like Saturday at 4 p.m. And I have to say to her, like, look, I need to like help these families, or I need to talk to this financial advisor because I only have 20 hours that I can squeeze a week, and I have to dedicate them to getting this thing off the ground, because this is my dream and this is what I care about. So undoubtedly you need personal relationships to kind of support you in this.
As you go through that, were there moments where you're just like, this grind too much? Like, did you get that point where like the mountain's too high?
Yeah, I had just spent probably $3,000 or so. Obviously, like my own capital, I'm not saying that $3,000 is a lot of money, but to me at the time it was to basically just organize and file the company, right?
Yep.
And literally a week later, I had done some competitive research, and I had seen that literally a direct competitor had raised $100 million Series C. And then I saw how crowded and fragmented and well capitalized all these businesses. But for probably a solid 24 hours, I was paralyzed. I just told my parents I was taking this VC job, when in reality, it was a 3-month contract. Yeah. And overnights and weekends, I'm working on really habits. And I'm like, you idiot. Like, how did you not at least look around a little bit deeper? How did you not turn over every stone? But the truth is, like, on any entrepreneurial journey, these moments happen all the time. But early on, they feel like anchors. They feel like you just fell off a cliff, or you just fell down a mountain. When in reality, this stuff now happens to me every day. I'm just conditioned to it. I'm used to it. And that's why you have to go through the trials and tribulations, that these moments of, oh crap, dare I say, and you eventually learn to get through it. And you learn how to capitalize on certain moments, and you learn how to get through it.
There's this thing that you see where it's, I think Graham Weaver talks about it, where it's like
Yeah.
the initial where you go up that fear of the uncertainty and then your learning curve goes down, you do it again. It's just that curve of learning like just gets smaller and smaller. It's the same thing it's I hear you saying where it's like, well, initially these boulders were boulders, but now when I see 10 boulders every single day,
Yeah.
they're just rocks, right?
There's all these personalities that are online that kind of get people out of bed, right? But then there's people like Graham Reaver. And when you listen to something of how to live an asymmetrical life, of basically aligning your values and your passions and saying, look, when life, because it's inevitable, life's going to smack you across the face. You can let it keep you there. You can let like the world drop you to your knees and like kind of keep you there permanently. But you got to learn how to get up, because if it doesn't happen, living a safe life and a linear trajectory forward, at some point you're going to look in the mirror and you're going to say to yourself, and you're going to have that moment, whether it's self-imposed or the world imposes it. The thing is, and to kind of tie this back to, did you have any moments where, am I really doing this thing? You feel them very heavily early on, but you need to go through them. And that's why I also always very encourage people, if you're doing something like this for the first time, like you're starting your own company and you want to be big and bold, like you're looking for something that can transform daily lives, that can completely create a tectonic shift in a traditional industry like financial services, I strongly encourage having a co-founder. It makes life so much easier when Vera, my co-founder, we're jumping on a call on Wednesday nights and Tuesday nights or Saturday mornings. Like, this is how the company started. And it's just nice to know that someone's there with you. They're going through hell just like you are, but you're doing it together. There's a little bit of that partnership, because there's moments where I've had to throw him on my shoulders. There's moments where he's had to throw me on his shoulders, which is what made us winning that FinTech Summit pitch competition so awesome. Because he and I are standing there and we're looking at one another, and everyone thinks, oh, wow, we just had a good presentation. We had a good 6 months. We had a good year. What he and I both know, it's been 3 years of not knowing when the next paycheck's going to come. It's impossible to connect the dots looking forward. That's what I'm trying to get at.
It's got to be a huge mental relief, as well as like being able to someone to share with who's in there with you, where it's not just listening to you, it's listening with you. Like, that's got to be a great blessing. Let's take a pivot here. And I think that you said something before. There's these two themes in there where it's like you're doing all these pitches to different groups, while also at various stages having this, like what we all feel at times, like this imposter syndrome, where it's like, if I don't feel like an imposter, I'm probably not at a job that's challenging me enough, right? But it's like in front of a board, though, or in front of a VC, or as you're going these things, it's got to come correct. So can you tell me, especially as you've reached this round, what did that look like in terms of preparation for all of those different pitches? If I'm sitting on this, are you preparing for each one based on the people sitting across the room? Can you tell me a little bit about like that preparation process of how you came to each of those?
I think it's very important to know how people like learn best, right? So for me, I'm an experiential learner. I just need pure rep stress. It doesn't matter if you show me a video. It doesn't matter if you coach me one-on-one through Zoom or even in person. It's not going to resonate until I do the damn thing. So I want to make it very clear for some people, they just need to go to Y Combinator's, startup school, which is totally free. You can crush it in an afternoon. They could be 10 times the better founder than I am. Others just need a mentor who can coach them every step of the way, and they'll figure it out. When it came to pitching, I knew that I just needed reps. So I talked with everybody and anybody who could take my call, from LinkedIn DMs to anonymously submitting, contact us forms on VC websites, and just seeing who I could get in front of and just constantly trying to iterate and innovate and improve every single conversation that I had. But to be more specifically, to kind of change these gears more towards literally our process, the way that I started to kind of recognize was that in this environment, and I think it's important to acknowledge, cash is expensive. There's not a lot of dry powder out there. At least this was, a year ago. And with that being said, I talked with people who I thought were very smart, and they said, take whatever you can get. So I went out there, I opened up a safe note. It's a very traditional way of raising capital in a pretty founder-friendly way. All it requires is money being wired and essentially getting a signature. It's a lot different than a convertible note or a priced round where negotiations really include. And so went out and essentially we raised our first 200K from users of our platform, because that was easy, right? Go to people who have used it, got skin in the game, found value out of it, and ask them for $5,000, ask them for $25,000, ask them for $75,000. Just try to get any pool of capital and then use that capital to try to create FOMO, replicate that process over and over again. So then when we pitched to Elevate Ventures, our first institutional investor, quote unquote, right? They gave us 100K. I was able to actually show proof in the pudding and the fact that people were already bought in. Because I think what people forget is Raising from a user or an angel investor is more about the vision. It's more about the problem. When you're raising from an institutional player, it's about the ROI. It's about the multiple on invested cash. It's about the net IRR. It's based on their limited partners and who's giving them the capital and what does this capital meant to be for their mission or their mandate. And that's what you really got to understand. That was a really big learning lesson for me. So when we got that 100K from Elevate, I felt golden. I'm like, okay, now that I've had success with individuals and institutions, I want to go and raise a real round. Like, I want to get out there. And essentially it took 4 months of just getting in front of the right people, leveraging the audience that we were building organically by building in public. And it was easy, but the last 4 months were easy. The first 16 months or the first 18 months, horrible. Oh my God. I could tell you stories that would make your skin crawl. I'll share one quick example. My girlfriend is a physician assistant, and we're driving for her to do her ER rotation in Fuquay-Varina, just outside of Charlotte, North Carolina. We're about to start a 14-hour drive. We got our cats in the car. They're going crazy. It's 6:30 a.m. And one of the angel investors who I've been pitching multiple times over months gives me a call and says, Jack, I got $25,000. You got 30 minutes, pitch me. In the car, as the cats are screaming, as my girlfriend is trying to quiet them down, as the sun is gleaming in my eyes and I can't see anything on the road, we're hitting Dayton, Ohio traffic. I'm dodging, cars to construction, and I'm literally trying to pitch this guy my business. Needless to say, it went horribly. But you go through that. So then when I'm in a polished conference room in Atlanta with the former vice chairman of JPMorgan by my side, who was our first angel investor, pitching an institutional investor who wants to write some $1 million check, I'm ready for everything and anything.
So what I'm hearing is you didn't bring the cats with you into that meeting. I think that's the takeaway that I'm leaving with.
Yeah, that have a controlled environment. Yeah, maybe that's
Controlled environment.
Maybe that's it. Maybe that's it. What you can't control.
Hey, you said something there that is actually kind of interesting because it's like we on this podcast, and I mean, in our day-to-day jobs, we talk to the other side of the table all day.
Yeah.
About outside of the numbers. What are you listening for? Is it the person, the team, right? You were talking about how when you came, you had market validation, right?
Yeah.
You had strong market validation because people who use it want to put money in. And then you started to go to these firms. So we know what they look for across the table a little bit. We're learning more. But when you came in, you talked about like talking to A16Z versus talking to someone who's going to put in $5,000. Is that a different motion? Are you thinking about like, are you analyzing who are the people sitting across the table? What's their history, et cetera? Or is it like, we know who we are, here's who we are, and here's why you want to be a part of it?
Quick answer, you just can't force it. Very similar to sales. You can't force someone to sign the dotted line. They got to feel comfortable and confident. If I were literally a founder today and I were to start all over again, and let's just say all I have is a presentation, literally how I would conduct every single investor conversation is as follows. I would walk in, I would ask them like why they took the meeting, and I would do it in a conversational fashion, break the ice. After that, I would ask them about their background. I would figure out what their expertise is so that I can get a sense of their lens into investing, right? Some people are very numbers driven. Some people are very collaboration driven. Some people are domain expertise driven. Like, you don't know what the mandate is of the VC. You could probably look on their website or the investor, but you can just ask them. And then after that, I would say in 30 seconds or less, what we do, the stage they're at, and what my ask is. And then I would turn the mic to them and say, what's your gut reaction? Does it make sense to continue the dialogue? Should we set up a second call? That would have saved me so much time and attention and just maybe peace of mind if I had known that. But I had to go through it, right? In order to get to a spot where I felt comfortable going through those three things in every call.
We talk a lot about where it's, we have an obligation to our clients to develop technology to help them in their business. Like, our mandate is like, make your life easier with technology. You're the same thing, right? You're helping that people. What is your secret sauce in terms of, the market, the people? How are you staying current with that? Where it's like, things are changing so fast. Like, how do you keep coal on your face to understand the end user while all these other things are going on?
For context, along the habits journey, I probably have spoken to over 2,000 millennial families and probably at least 1,500 financial advisors. So a lot of Zoom calls, man. That is what I found to be the best. Like, of course, you can follow strictly VC. You can have TechCrunch notifications. You can go on Axios Pro Rata newsletter. You can follow Y Combinator's recent investments and, winter or summer class. You can see Techstars accelerators and where they're deploying capital. What I've found to be best for not just me personally, but for habits in general is to keep talking to our end users. So I would say daily. I don't necessarily maybe do a 1v1 call with like families these days to like help them source and connect with a financial advisor. But at least today alone, like looking at my email here on my right screen, I've emailed at least like 5 or 6 individual users of our platform within the last 24 hours. And I love staying engaged and with them because people will tell you what's going well and what's not going well. And I think what I've learned best to stay current with everything is, like be up to date on stuff. Don't get caught into the noise because everybody's doing everything all at once, right? There's so many competitors. There's so many different things going on. You can't get caught in the noise. The best place to be is asking for critical feedback from new users and existing ones. They'll tell you everything that you need to know. And I think honestly, man, that's as simple as it gets.
Here, not to get too into details, is this a volume game? Meaning like you can get distracted by outliers whose voices are super loud about, I hate this UI or I hate this thing. Is it a numbers game of like, hey, I need a sample size to hear that voice a number of times?
I don't think I have a mature answer for that. But what I would say, at least with the experience to habits to date, I think it's imperative to continue to speak with people. Now, the volume probably decreases in time.
Sure.
Because I can say with a very high degree of confidence, I know exactly how every sales call is going to go. I know how exactly every customer testimonial call is going to go. But the reason why I continue to have new ones or reach with existing ones is because you never know what someone's going to say. Mm-hmm. You never know what someone has experienced. You never know what might come out. So you're not joining that call for knowing that 99% of it is probably going to go the same. You're joining it because if you hear 1% something different, that's either a trend or that's something that you need to be made well aware of because it could either be a potential problem or, thinking startup, an opportunity.
That's a fascinating intersection, right? Because just those two stats, 4,000 calls across the two groups that you mentioned over these years, you are closer than probably anybody in the world or industry. And it's like there's this handoff between now I know enough that I have the confidence that I can determine like this is the best practice for this fit. And then there becomes this divergence where it's like, how far do I recommend what should be done versus continue to listen, but also check in, like that harmony of like having a point of view versus being malleable to new insights and how to maintain that connection. That's a part where it's like everyone's always going to struggle with. And I guess it's like, as you looked in your crystal ball, like how does that look for you guys in scale where it's like you double, you triple the size? Like how do you stay close to challenging your assumptions about those best practices?
It really comes to hiring. It really comes to your boots on the ground. And this is something that we're actually struggling with at Habits because we desperately need to hire. So I guess shameful plug. If you're talented and you're either in tech or on the business side, please go to www.usehabits.com and check out our careers page. But the reason why I say this is because you really got to have good culture carriers. And it's hard to carry the same culture that was around when Habits started, we had like 5 or 6 people and no one was paid a salary.
Sure.
Right. So people are there because we love this problem. We want to be the solution. We want to listen to people and we want to create change. That's hard to do when you start to scale and 6 people can't cover it anymore. And so in order to keep good operational functionality and being close with those end users, you got to empower and train the people coming in so that they recognize why we do what we do. And I probably don't need to educate you on how hard it is to hire in this environment.
Absolutely. One of the things that you talked about as you get the seed fund, as you've gotten funding before, I'm very interested about that post-investment relationship about, especially at the stage where things feel like they're changing every day. What does that look like as, say, you pitch someone who funds you, this is a strategy, here's where we're going in the next 12 months. 2 weeks later, you're like, all right, taking a left. In terms of like keep the level of detail about keeping them abreast, like what's that right balance where it's like they say, we trust you versus I need to tell you we're taking a left turn?
Good VC funds recognize pivots are inevitable. And there are so many different examples that I can share with you. But what I always kind of love to do is I actually encourage people like go look up Stripe, go look up Twitch, go look up Lyft, go look up DoorDash, go look up all these companies and really do your homework and research and see where they were 15 years ago. Because they were doing significantly different things. They had significantly different visions and go-to-market strategies than they do today. So good VC funds recognize that. That's who we were looking for, experienced investors. But when I've internally with our team and I've gotten them bought in on a vision and a product roadmap that is, structured and set in stone for the next 2 years, and I go to my co-founder who's like the technologist, and I say to Vera, hey man, remember everything I just shared with you 2 weeks ago? Yeah, we got to throw that all away. And now here's like the new plan. Here's the new idea. And he's like, what are you doing to me? Like, we just put all these resources, we just put all these plans in place, and now we got to restart. But that's why it's so beneficial to be a small team. That's the benefit that we get. We can get information quickly and we can pivot quickly. With investors, maybe this is kind of a dark comment, they just want the ROI. Like, they want to support you. They want what you need. I think any founder who believes that their VC investors or their angel investors are going to be the key to their success, newsflash, they're there because they invested in you and they listened to your pitch and they liked it. And not that you're a number on the spreadsheet, they probably do care about you personally. But at the end of the day, we're doing business right now. And my job as CEO is to deliver value to my customers, our stakeholders, our shareholders, our employees, and anyone in between. And that's what I'm going to be focusing on, even if that means pivoting from our status quo of a product roadmap.
That's super helpful. And I think that you said a word there very quick, but it's like the personal side of it, that relationship that you have with those organizations. I got to feel like, and I'm no expert in space, but as they're sitting across the table from you, the business plan at this stage, obviously hypercritical and that profit, but like a lot of it is an investment in Jack and his co-founder, right? Where it's like that relationship in terms of figuring out, like, does this fit as a relationship? Can you tell us a little bit about, like, as you go through that with these different firms, what part of your personal brand needs to be present in those pitches and in those presentations?
I always kind of think that pre-seed, seed, even some Series A, depending on the industry, it's more art than science. It's a little bit less about, how big are the margins, what's top line revenue, what's the multiple on this or the multiple on that. It's more so of what's the idea, what's the conviction, is there founder market fit, what's the domain expertise, what's the unfair advantage, what's the secret sauce, right? What is it about this team or this company? And I think if you have less than 10 employees, it's really impossible to talk about the company's differentiators without talking about the people kind of behind it all. So I think if you speak with most, seed investors and earlier, they're all going to tell you it's completely about the founder. They want to know, what does this person know that everyone else got wrong? And that's a hard question to answer, which is why I often say you got to lead by example. And I guess shameful plug, Chris, like, my background, I'm a banker. I'm not a marketer guy. I'm not a content creator. Well, this time last year, I had 0 followers. And in this day and age, I guess I'm proud to share, like, I have like 5,000 subscribers on my blog. I have tens and thousands. I think now I have like 75,000 followers across LinkedIn, Instagram, and TikTok. And it's not because I'm a genius. It's just because I've been talking about a problem that I've been obsessing about for years. And it's very niche. That is validation to people. Jack has a secret sauce. He's got a following. That is something that I think is very unique to this day and age and the power of online communities that I think if you were to ask me like 10 years ago, really wasn't available.
I think that when you talked about at the very beginning, when you're talking about like, how is trust earned in this modern society via these medians? And it's like, part of that is like, okay, well, if I create a persona of a self and go out and get followers, that feels like a motion. But there's this other part too. It's like that authenticity that comes through. It's like, I think everyone knows it's like those people who are getting followers, that people want to listen to their message. It's not because it's shiny or glossied up. It's like, we're talking about Graham Weaver because it's like, this is a message. It resonates. He cares. He's done the work. He's gone through it. And you get this following that now says like, that gets transformed where it's like, all right, well, you know more than I think I know. I listened to your point of view. What's the methodology to get there? Okay. And then here we are. And we're talking about moving on to habits, right? Like it feels like such a natural motion rather than a sale.
Yes. And to piggyback off of that, it's why I believe having a very strong monthly cadence of communication with both existing and potential investors is critical. So we have people who have been on our monthly memo that I send to a select group of, I would say like probably 200 people who are Series B investors. They have no business following our early stage journey right now. But the reason why is because like they've asked to join it, or I've asked to include them, because when people see that you deliver every quarter, every month, or just maybe every 6 months, it also kind of puts proof in the pudding, because now they know, okay, well, maybe that Series B investor is not ready for us today and we're not ready for them. But, 2 years from now or 3 years from now, when I come to them and I'm like, hey, we're raising a $25 million Series B at this valuation, they know well in advance of that first conversation that they followed us all the way here. So they know how I talk, they know how I operate, and they know that we deliver. And I think that's also very critical when raising capital that a lot of founders miss. And you don't need tens and thousands of followers on social media to develop that skill set.
It's interesting because it's like that previously in this industry, we talked about like that track record, and that's returns and stuff like that. That track record is kind of democratized with this means because it's consistency in messaging, it's following through, and it's just showing up the same way, the right way over time, where it's like now you're in that meeting and it's your voice, your brand, your kind of, I know this person is not going to ghost on me, for lack of a better business term. Like there's value in it, right? There's a return on that investment of doing it. Because I think we see it from the other side, right? We see it from the private equity companies that are fundraising or hedge funds that are capital raising, where it's just because there's a fund coming, you're always raising, right? Where it's the same things, like that consistency in communication and growing that base just are the seeds that you plant that fruit when you come around the next time and the next time, that so many people are just in a gold rush at the beginning to miss out on.
Yeah. I mean, whether you're KKR or Coatue or Brookfield or Balyasny or insert other super large private equity investor or asset manager, these people got to raise capital too. They have LPs. I think it's funny that founders believe that they have it hard. There are so many VC funds that have it just as hard because they have to just convince a different type of audience. And when I think about this cadence, or, we're kind of going back and forth here, the best thing that you can always be is, how I like to say, is 95% truthful. And the reason why I say 95% truthful is because you can't lie, you can't deviate, you're going to set yourself up for failure immediately. But if something went wrong and you don't really understand why it's wrong, don't address it in the memo. Like, part of this is also learning how to be a good communicator and leader. And that has been something that I've been able to benchmark, because I used to work with CFOs. I used to work with COOs at publicly traded multinational companies. And they will say the same thing, which is that it's important to disclose, it's important to acknowledge, but when you're building something, you're never going to have all the answers. So there shouldn't be this level of pressure to convey confidence in every facet of your business. But that doesn't also have to mean like, we have no idea how to solve this problem. This is a huge issue. Maybe instead just convey, hey, this happened. And then 2 months from now, be like, hey, by the way, we solved the problem, right? So I know that's like a very specific, very niche component to it, but I think every founder or anyone listening to this who's ever had to communicate or put together a memo of that scale understands what I'm talking about. We originally had like 300K. We originally were going to come out of the gate with raising like an angel round of like $350,000. We had 6 or 7 angels where all that capital was committed. At that time, I kind of was doing memos, and I was not full-time. My co-founder went full-time. And then literally the day I had told all these clients of mine that I was no longer to be doing work and I was going full-time with my startup, Signature Bank failed. The run on Silicon Valley Bank came out. Just a tumultuous economic environment was over. All that money disappeared. And I had conveyed to all these people, we're closing the round. We have this capital committed. I didn't even have the paperwork, Chris. So I then got to email all these people and saying, we're bootstrapping. Yeah, I was able to turn the story to say it's all because we want to kind of nickel and dime our way kind of through this. But in reality, it's because we failed. I failed. There were unforeseen circumstances that forced us to pivot, at least with our fundraising journey. And you want to know what? I am so damn happy that happened, because I would not have been a good fiduciary of capital. But now I know how to do things. And I'm sure 2 years from now, I'll say the same thing.
Thanks for sharing. That's a tough one. As we talk to a lot of people, one of the things is, on every podcast, they're like, hey, if you could talk to the 23-year-old version of yourself, like, what would you advise them to avoid? And those are always a question to me that sticks out in my mind, where it's like, I tell myself to do the same damn thing and learn, right? And it's one of those things where it's like, that question is like, what would you do differently? It's like, I would make the same mistake. And it's one of those things where it's like the greatest mistakes that show you that great opportunity. There's a lot of success here. Were there any of those moments beforehand as you're going through it? Like there's a significant one where you're like, for the love of God, like this is just a catastrophe that turned out to be that multiplier, just like you shared?
What really kind of got me through it, I think the mentality that every founder or anybody who wants to do something that's incredibly challenging and is a road less traveled, you just have to stubbornly put in your head, every single day that you want to quit, every single time that you get an additional no, you're one step closer to where you need to be. Moreover, if I told you that you were 100 no's away from that yes, how fast would you chase those no's? Like you would go to the grocery store and pitch everybody your idea, trying to get as many no's as possible. But we don't think that way because uncertainty is the gloomy, daunting, thing that makes you anxious and lose sleep over because you don't know when it's going to end. And so in the year 2022, 2023, the thing that I remember most was I would say to myself, all right, every single day that you want to quit is another day that someone else did. And if you really want to be successful, you got to go deeper and deeper and deeper. And pessimists could say, if it didn't work out, that was an idiotic approach. I should have known when to pivot. I should have known when to take myself out. But when you got conviction and you're passionate about something and you are unwilling to say no, you'll go into what one of my closest mentors tells me, which is like cockroach mode, and you refuse to die, and you'll figure it out one way or the other.
You come consistently, you show up the same way, but also one of the things that I'm hearing again and again is just like, it's this mentality of like you chase a no, which seems so backwards to our society today, which is keep it comfortable, stay in the lane, like make sure everything feels warm and fuzzy, but all the insights live on the other side, on the outside of those lanes. And those companies that seek them, it's that same thing where it's seek the no's aggressively, and that just expedites the curve. And then you're looking back on them. And those boulders we talked about before are just a series of rocks you're seeing every day, and they don't mean anything to you.
Now you struck a chord with me, and we're opening up the vulnerability chamber again. I think so many people can relate to this, especially in their late 20s, 30s, and early 40s. And I don't want to put words in your mouth, but I'm sure, Chris, you've experienced this, or your friends have experienced this, especially in men who are very ambitious or women who are very ambitious and career-driven and have high aspirations for themselves. You can have everything, the job, the house, the relationships, you can have everything going for you, but still feel a sense of unhappiness. And then you get like a level of guilt because you're like, man, like I have it really good, but why aren't I happy? Is that why you pivoted back to software? I'm not going to put words in your mouth, but maybe that was the answer. Is that ultimately the reason why I decided to pivot out of JPMorgan? Undoubtedly, that's my answer. But I think in every way, shape, or form, I'm not trying to tie this back to we all go through a quarter or midlife crisis, but that's the beautiful part about our platform, man, is that I think finances are something that are really near and dear to people's hearts, and it messes us in the heads in a lot of different ways. Well, that's because we have too much money or we feel like we never have enough. It's the cool nature of a commodity and a thing that's really just a tool to help us live the lives that we want. But it's hard to know what kind of life we want to live unless we got someone who's an expert and kind of knows what they're doing and can maybe be our advocate or maybe can help us, close our blind spots. But it's what you had said just right there just really kind of spoke to heart with me. And I think it's one of the many reasons why I love what I do. And I think I have the best job in the world.
Yeah, that's awesome. And I think the service, it's one of those things you said where it's like to find like what you want to do, you need to make that leap. You need to seek the no. You need to get super confident in being uncomfortable. Like that theme is very much there. But the offering that you have, especially with financial advisory, especially with like managing your home and expenses, so many times the money and the comfort or the need that you think that you have for it is a blocker for you to even see what you're enjoying, right? It turns everything into a job, right? And that is one of the crippling things. It's like, I can't even have the space to think about what I want to do because I have to do something because I don't have my financial affairs in order. And the other part of it that I've found that really resonated, especially with your offering, was like, there's so many people out there, especially I've worked with a number of people in finance who can't manage their damn finances. And it's like that thing that there's such an ego attached to, well, I can't do it now. There's this gap between having the comfort to say like, I need to find someone to trust. How do I find that someone to trust? That's too much work. I'll just keep grinding.
The way that I think about it is the way to level up in life and in business is to find experts and stuff and empower them. It's really that simple, right? It's why we want the best surgeon when you're going to the hospital. It's why you want a world-class accountant or you want like a world-class partner in this life. It's why we spend a lot of time and attention on the people that are in our inner circle or our professional circles. It's why innately we value mentorship and, assistance from elders, because there is just so much value that you get from people when they've either personally experienced things that you're going through or just have a domain expertise that can help you just avoid bad things from happening, which is really the financial hack of life. Just avoid something going wrong.
Yeah. It's interesting because it's like that same thing that we keep talking about, right? It's like, get that trust, the online communities that created. And then it's like, I think you said you are the 5 people you surround yourself with. It's multiplied where it's like that Seth Godin book on tribes type of thing, where it's like that find your tribe, where it's like those people who are willing to kind of, that you trust their voice, and that network effect of that tribe resonates so much louder in today's economy than any place else. And then the medium is the tools that you're using. So it's like, it feels like this very altruistic cycle where it's like, be a credible voice, find other credible voices, build that trust that's warranted due to that capability. And then the solutions you offer, you're signing an order form, you're not buying anything.
Very well said. Couldn't have said it better myself.
I read it off your website. It's like right there. I'm reading it verbatim.
See, the benefit that I have, what people kind of forget about content is that I have the benefit of being able to edit stuff, right? So what I've actually have done as of late, at least on some of our social media channels, right? And this kind of helps evangelize the business, is literally like scenarios where I'll record a video where it's like, if I didn't edit my videos and it's like super awkward and uncomfortable, but people kind of love it. But counting this back kind of full circle, when we talk about, starting a company, raising capital, the thing that I think a lot of people just forget about, and maybe I'm kind of tying a bow or tying a knot on this conversation here, but it's a journey, man. And it's different for everybody. The reason why investors love investing in people who have already done it is because they know what not to do. And notice that I didn't say know what to do, because when you know what not to do, then you can figure out other things and fail as quickly as possible. But, a mentor of mine shared with me a very powerful story. And I think a lot of people kind of forget this, but, launching a business is a pretty unforgivable journey because there's just so much uncertainty. And this guy, he scaled his business to be like 10 million in monthly recurring revenue, pretty incredible. And within 6 months, they were doing 100 grand in monthly recurring revenue because Facebook at the time came out with a product and their distribution just crushed them. Guy walked away with nothing. But you want to know what? He is an incredible manager for his VC fund. He raises capital easier than everybody. Every single investment that he makes, and I follow it intently because he is constantly hitting home runs. Because people who have been through really rough situations, they learn a lot. And so maybe his journey was never meant to be the top tier founder, but you know what? He may go down in history as one of the best managers of capital of all time because he's in his early 40s and he's just getting started. It's like things like that really inspired me. When you think that you would be knocked to your knees and kept there permanently, but people get back up because they're a seasoned veteran entrepreneur that recognize you just got to figure it out, man. And you just got to roll with the punches, no matter what life throws your way.
Yeah, I love that. That kind of professional invincibility that allows you to get out of bed and be like, let's go find a way to get kicked in the teeth today because that's my best opportunity. It makes everything else just pale in comparison. You see what you're looking for type mentality where it's like, if you're looking for adversity and you're hunting it down, it hides from you. And then when you find it, it's there. It's amazing how that like slight shift can just open up so much mental freedom to be able to like do the work you need to do.
Yeah. And I think I can relate that to how we acquired our first customers. Because when we wanted to go out and monetize, not gonna lie, man, I was kind of scared to ask people to charge. Like, it's a weird phenomena. But the thing is, just like most things in a startup, just start and it's going to get so much easier. It's no different than going to the gym, right? What do they say? The hardest thing about, getting in shape is just getting your way to the gym, right? Or setting time aside. With us in sales, you get creative. For us, we asked financial advisors to pay a refundable deposit because it was low barriers for them, high reward. I'm going to get some really cool clients out of this. And all I got to do is pay Jack $750. Well, then, 6 months later, we said, well, now it's $1,000. And then months later, we said, well, now it's $2,000. Months later, we said it's $5,000. And we just kept going it up because, once I was nervous to charge, now I'm at the point of we can't do anything for free. Everything has got to be charged because time is so precious with our team. And so we'll find unique ways to, compensate, but we still have to develop a very high quality service. And I think that's the part that really starts to get fun within a startup of how do we monetize, but how do we continue to add value? I think that's the most fun part about the job.
It's a very salient point, right? Where it's this aspect of customers are smarter than we oftentimes give them credit for, right? Like they understand for the most part, and sometimes you need to educate a buyer, but it's your payment here is an investment in improving the product that you're going to rely on more and more. And then they're happy to do it in the same way they shell out money for other things. But it's this part where it's don't be afraid to ask. And then you're going to get a no, understand the no, and go from there. And then, like you said, it's like they're going to be always valuable customers as they provide that insight. You listen to them, and the product evolves. It's like that's the relationship you have with the buyer, not the monetization scheme.
You took the words out of my mouth. The way that I've always looked at it is you're going to learn very well how much people value your product or service when they got to take their wallet out and pay for it.
Absolutely. When we spoke before, you were talking about the industry that you're in and the kind of the passion about why you're excited about the industry specifically. Can you educate me and everyone about like specifically this industry, why and what makes it unique today as an exciting area?
Yeah. So specifically with financial services, I think a lot of people understand the evolution of the industry. And maybe just to kind of briefly give some history around it, right? Think about the stockbrokers in the 80s and 90s. Then you started to have retirement products because, you had to do more than just buy a stock. You actually had to have something that provided some verified income. Well, then people started to recognize, kind of leaning into the financial crisis. Well, it can't just be retirement products because those might fail. We also need retirement planning, 10, 15 years in advance of that date, you're no longer to work again. We got to talk to you. And then hence, the birth of the financial advisor, right?
Yep.
Well, then from retirement planning, ask 2008, and, a lot of the repercussions of that event started to kind of continue. Well, then we started moving into financial planning, and now we're moving into holistic financial planning. It's more than just investment management. It's about tax planning. It's about college planning, family planning. If you're going to buy your first house, right? There are so many ways in which an advisor can be equipped to partner and service a family that has never seen in years to come. And so our thesis at Habits is that that's going to continue and that financial advisors are going to grow and have a bigger role within families to be maybe like a household CFO in that sense, right? And with the power of AI and, operational driven technology, they're going to be empowered to do more with less, right? I don't need to kind of maybe educate you guys over there on this topic, but specifically with the financial services industry, brick and mortar will always be around because of their scale, but people aren't very familiar with the registered investment advisor community. These are independents. These are people who work from home. They basically run their own business. They can do a flat fee with a family. They can do an hourly engagement with a family. They can do traditional AUM, which is probably the most well-known source of revenue for a financial advisor. And the reason why we're so bullish on these 15,000 RIAs out of the 450,000 professional investment professionals like out there is because they have so much flexibility in their levels of engagement with early stage families is something that, from a compliance perspective, that broker dealers really can't compete with. So at Habits, I would say probably 90% of the advisors on our platform are registered investment advisors because they have so many unique ways that they can engage with a family. And that's going to be the future because the future requires a personalized and customized experience in every aspect of our financial plan. More specifically, why big financial institutions like JPMorgan, Goldman Sachs, Fidelity, Citi, T. Rowe Price, I can go down the long list of all the Wall Street firm names. If you look up the headlines in 2023, they pumped billions into hiring because they recognize that people care a heck of a lot more about the name on the back than the brand or the jersey on the front, because they want a customized and personalized journey. So forgive the word vomit there, but the reason why I articulated, Chris, is that younger generations, they want more for less, and they want it to feel entirely personalized and customized. And that's hard to do unless we got the personnel to kind of back it.
No, that makes sense. That sweet spot, you mentioned at the top of the show, but is that sweet spot for you that kind of out of college, first starting to get some money in the pocket, want to set a long-term plan? Is that your target audience from the consumer point of view?
I would say our target demographic, the acronyms of what? DINK, Henry, I've heard ALICE before, basically articulating people with low liquid assets, but higher income and approach life a little bit differently than baby boomers, right? Where they're switching jobs more frequently, delaying kids, prioritizing their career. And the reason why we have such a wide range of 25 to 45 is because I believe that these generations, older Gen Z, younger millennial, is that they share more in common than they have differences, right? And so for us, it's contingent on the life stage. It's when are you having that first kid? When are you getting married or engaged? That's why we call that DIY expiration date, the crucial moment that people come to our platform, because we're not in the business to convince you need a financial advisor. We're in the business to convince you that if you're interested in understanding what a financial advisor could bring to you or your family, come by Habits. We don't charge you outside of your time, and go figure out if having a financial advisor is the right option for you, because we have everybody and anybody that could service you and your family. Does that answer your question?
It does, and I'm logging on. It does, because it defangs a lot of I have a very specific question. I have a broad need of items. I don't know enough to know what I need. And I can attest this, I have an arrogance about, hey, I know best, who's going to tell me more? And that makes me slow to pick up a phone call, go to one of these big banks, or even do the research to figure out who could help me, because I'm in my own way. And I think the application form of reducing the friction to ask a stupid question, find an audience, and then figure out you should be asking more. It's an attractive method to kind of low key and not without taking a big jump in, get answers of things that maybe I'm embarrassed to ask.
Well, Chris, now you're starting to touch on the broader vision for Habits. Not to necessarily tease the audience or yourself. Our plans are to be far more than just a marketplace or a matchmaker. We got some big and bold plans that we believe are going to completely change the way that people just approach financial planning, or maybe just at least those first steps in that journey.
That gives me a good segue then. Where can we follow? Where can we learn more as these things come out and become aware of them? Where can everyone kind of find more about Habits?
Easy as the URL, www.usehabits.com. We're on every social media. You can, I guess, shameful plug of my Jack Boudreau, Jack_Boudreau_. We build in public. So any type of conversation, from pitching VCs to sales to engagements with customers to internal meetings, we share everything and anything. We've got a blog. Once again, all of this is available on the website, www.usehabits.com.
Perfect. And we'll link all that in the show notes. All right, final question. If someone is out there listening that needs a nudge, or to kind of get some of that courage to leave that herd path, right? Take that necessary action. The scary ones we talked about at the beginning, that those small, scary steps that provided a change in your life that's so monumental now. What would you recommend? Is it a book? Is it a personality line, etc.? What would you advise to help people nudge themselves onto courage?
At least what helped me, I think everybody should read Shoe Dog. It's not only a great book about Phil Knight and the Nike journey, but the guy literally was selling shoes out of his trunk, right? Driving coast to coast, was literally creating shoes in his garage with his old track coach. Flew with a one-way ticket to Taiwan or Japan or some of these countries where he didn't know the common language, knew nobody, and just had to figure it out, right? When there was so much competition and existing big brands like Reebok and Wilson, and I don't need to kind of go down that line, and the revolution of providing a royalty to an athlete and finding collaborations. I think Shoe Dog is an awesome book. And if you're a sports fan, why not? And then I guess for the digital native who maybe doesn't want to read, I get that. There's one personality on TikTok, and he's also on Instagram. It's Higher Up Wellness. He's like your classic fitness nut, but you want to know what? He's inspirational. He's honest. He's direct. He'll tell you how it's a good way to start your day. He'll tell you it's cringe until it's not. I think some of the monologues that guy has, he does some really great stuff. And you want to know what? Just to show you how embarrassing, I can't even say the guy's first name, but I know his handle, because I know that at least when I come across his videos, once a week or something like that, I learn something from it. And I think that's one of the cool parts about social media and online communities.
Awesome. That's all I got. I really want to thank you for the time. This has been super helpful. And I think it's going to help a lot of the show viewers to understand both the how you went to work from a psychological state, but also some nuts and bolts for those relationships that you've had. So thanks, man. This has been wonderful. And I really appreciate the time. Thanks for listening to Preferred Return. If you found this episode thought-provoking, consider subscribing wherever you get your podcasts. For more information about today's topic or for additional takeaways to own your technology edge, visit altvia.com. That's altvia.com. We're back next month with another episode, so stick around and let's make sure you get that preferred return.